Hello and welcome to the Books Crypto Club weekly catch-up on Zoom. It is Sunday the 29th of May 2022 and today we're going to be talking, as always, about whatever comes up. We have these sessions open to everybody, so whether you're a novice or an expert, and try and answer the questions as they come along or listen to any news and views that people have. Sometimes we talk about crypto, about blockchain, about distributed ledgers, about DeFi, NFTs, ICOs, STOs, and any other three-letter word. The session's recorded, so if you enjoy this, do subscribe, do click on the like, make comments. Even better, come along to a future session. We hold these every Sunday evening at 7 p.m. UK BST. You can find details in the link below. Hope to see you there and hope you enjoy today's session. Let's see who's going to come and join us. Hey, Mark.
Gary, hey, how you doing?
Hey, good, thanks. Good to see you. We're joined by a few others today. I see we've got Simon's joined us as well, and Key. Hey, Simon.
Hi, Gary.
Good of you to, hey, good evening. Good of you to join us, and Key as well. Hi, Key.
How you doing? Good, thanks.
Hey, good. Right, so some new faces, some new names. That's good to hear. It's always great in these sessions to get new people coming in and joining us. I don't know, any of you folks, are you novices, experts, somewhere in between? Who'd like to share first? I'll ask Mark because he's one-handed at the moment.
Thanks, Gary. So lovely to be with you my first time here. I just thought I'd drop in, have a look, see how things are going, see if I can pick up some interesting stuff and make a contribution. I guess what could be useful for you to know. So I used to work with a company called Bitfury. If you're familiar with the name, one of the original Bitcoin miners, 2014 onwards. And for the last 2.5 years, I've been running a trade association called INATPA for the blockchain industry, supported by the European Commission and Abu Dhabi Global Markets.
Fantastic. So quite a knowledgeable guy then.
I wouldn't say that. I'd like to go by the moniker of the least successful guy in crypto.
I'm sure there must be many others who've been far less successful than yourself. If nothing else, the fact that you're still interested in this space shows that you're a survivor in some way, and that's a great start.
Thank you, Gary. Or slightly mad.
Well, that certainly helps anyway, so that's good to hear. But welcome aboard. Anything in particular you're here to listen to or learn about or share this week?
So I guess I'm just keen to hear what's going on in the UK. You know, I've spent most of my career working across the US, Asia, and then more recently in the last 2.5 years doing a lot of policy work in Europe and in the Middle East. And I've been neglecting the UK where I live, and certainly West London where I am at the moment.
So you're enjoying the lovely setting sun and the blue sky, as I can see, as I look towards the east, which is where West London is relative to me.
Absolutely.
Oh, that's good. Well, great for you to join us anyway, Mark. Hopefully you might learn some stuff about what other people think is going on in this space. It's always fascinating to hear what people think is going on, and I always find it entertaining when you hear people saying about, oh, it's a bull market, a bear market, it's crypto winter, you know, and at the same time you then speak to people in Asia who are going, hey, it's crazy out here, it's fantastic, there's lots of things happening. So we'll see what comes up from that then, so that's good. So Simon, care to introduce yourself?
Yeah, so my name's Simon, based in London. Been trading crypto since 2013. Since last year, I've been building an application, a Web3 application on Solana. So utilizing very low transaction fees to enable decentralized media broadcasting.
Cool.
Yeah, but generally, yeah, still interested in where the prices are going. I think my view is that, yeah, we are in a crypto winter. Probably looking at 85% fall in Bitcoin, much like every other crypto winter, which would take us down to about 10,000. It looks like Luna is the first of many DeFi protocols to discover that they can't afford to give the staking rewards that they promised, and fundamentally taking out of capital. As less people join the network, there's no money to pay. So I think, you know, we've got to pull out all of these unsustainable things from the crypto sphere in order to find what is real and rebuild and go on higher.
That sounds a great approach. And I sometimes describe crypto and certainly blockchain, the technology underpinning it, a little bit like the aviation industry. and how it is that, right now we're kind of like the Wright brothers with their early hops and trying things. And then once that's worked, you then stick a second engine on it or a second wing, and it takes off and it crashes. And it's actually from the crashes and the mistakes that we learn and we develop and we refine and we improve. And I think that's very true with crypto, that there are a lot of things that are happening. And Terra's probably a great example. Terra and Luna, with being stablecoin, which was algorithmically stabilized, goes to show that there's a lot more engineering needs to go in to improve those things. So that's good to hear. Very positive outlook. That's great. Thanks, Simon. And I was going to ask Key, maybe you'd like to say hi and say what brings you along today and where your interest is.
Yeah, sure. I've been primarily on Crypto Mondays chat on Telegram, essentially, for a number of years now. I've been mostly trading what we call my personal account more than anything else. I'm originally from the TradFi world. Probably I've been doing that for about 30 years now. And I've been really trying to move into the crypto space, but so far no success yet. But I'm just here to follow along and just try to stay up on top of things. And I do agree with Simon. I think the Luna debacle is probably just the beginning, but the silver lining there is that it's just going to flush out all the rubbish projects, essentially, and where we start to build on a higher, more solid foundation and move on from there. And I think the other thing that it probably is going to trigger, and as we've sort of seen time and again in the traditional finance world, is that it maybe will probably motivate the regulators to move a lot faster than they've been thus far, but hopefully in a much more pragmatic manner than they tend to be. And I think with that regulation, it's just going to give lend more solidity to the foundation that's building here. But probably going to be worse before we see better.
Yeah, I think you're absolutely right. You tend to look at what happens with regulators, and we need to be, first of all, mindful of what the purpose of a regulator is. And typically it's threefold. First of all, it's to protect the consumer. Secondly, it's to protect the economy and as much as preventing systemic failure. And the third one that regulators don't actually talk about, it's actually to make the country competitive in some way, make it attractive to investments and that. And that's where I think the UK FCA has had a few challenges of the politicians right now. A lot of them are now saying, oh, crypto, you listen to Rishi Sunak, Matt Hancock, a couple of others, they're all very supportive of crypto. They're saying it's the future, we may as well get on board. It's a way of attracting investment, jobs and all this kind of thing. And the FCA is traditionally very risk averse, which is no bad thing for a regulator. But what regulators tend to do is they tend to come in late and they tend to come in hard, and they kind of over-regulate, and then it backs off, and then it goes forwards again. So I'm kind of hoping the FCA will step in and put in place what I describe as appropriate regulation. So sufficient to protect people, but enough to give them the wriggle room as well. So we'll see where that goes anyway. But Key, great to have you come and join us today. And then we've got Georgina's just joined us. Hey, Georgina, how's it going?
Really well. Far too busy. Got far too many things on my plate, but nothing's different. Nothing's changed.
Yeah. And is it nice and sunny in Wales today?
Cloudy, a little bit drizzly.
That's because it's great for anyone who doesn't know Wales. Wales only has two types of weather. It's either raining or it's going to rain. It's just a matter of which is why it's such a beautiful green country. I do like it. So we've not seen you for a while, Georgina. You've been staying clear of the crypto space, or you keeping an eye on it?
Not entirely. I mean, I have been, trying to keep up with what's been going on, and quite frankly, there's been so many different things going on. It's always going to be difficult to keep up with it entirely. But there are times in one's life when practical things and the day-to-day mundane stuff needs to actually take priority. And in many ways, I have to say I'm kind of glad, because the way that crypto has gone in the last few months is, I think it probably, if I was watching it, it probably would have done my head in.
Mm-hmm. I think it's something that you look at some people I think most people go through this standard phase with when they get into crypto. First of all, that you start off with they hadn't heard of it. Then they hear about it, or they hear about it being talked about. They go start learning about it. Then they get into it a bit more. Then eventually they get around to getting a crypto wallet and having a dabble and finding that a really painful experience, but kind of cathartic in a way. And then they go into it, and then they're watching the screens every day, and they're watching the candles going up and down, and they're frantically panicking, and they're getting into the FOMO, so the fear of missing out and all this kind of stuff. And it gets quite stressful for a while. And that's usually where they'll lose some money, and they get a bit upset, and they back off, and then they come back in. And then eventually they realize that the best thing with crypto is actually leave it alone for a while and don't get worried by the froth. So, for those who've been in since 2018 onwards kind of thing, but Bitcoin, for example, at the moment, it's around about the $29,000 mark. Well, I can remember when Bitcoin hit a peak at the end of 2017, I think it was, which is $20,000. And then it collapsed soon after that. So I think we're kind of going through that cycle again in a way, in that we've had this peak, which has got everyone excited, loads of new people come into it, and then the market drops a bit and people get very, very worried indeed. It's just normal. The interesting thing is, if you've been into it since 2018, even if you bought at the peak at the end of 2017 when it's $20,000 and then it collapsed, well, it's still $29,000 now. So it's nearly 50% up over 5 years. So it's a year-on-year increase of at least 15% per year, which is still better than anything you'll get with a pension. This is not financial advice, but certainly I agree that I think everyone goes through this stuff with crypto, that they get really into it for a while and they get overwhelmed and they get too heavily into it. And at times it's actually better to just step back and relax and take a long-term view.
I totally agree with you, Gary. And I've certainly, I started getting into it in about 2016. So I was pre the 2018 crash. And, at that time, it was a case of, oh my God, is it actually going to reach $1,000? And it was, it was like unbelievable that it could possibly reach $1,000. And, now look at us. Unfortunately, I didn't have much in at that time. I would certainly be far better off than I am now. And, in the greater scheme of things, it's still really only playing. But I think that I think you do have to zoom out anyway, unless you really are wanting to get into learning the trading and really getting into the nitty-gritty of how the markets work, and not only look at how the markets work, but look at how the market indicators are changing, because it wasn't that long ago where, the best in market indicators would be the on-chain analysis. But now, of course, because the big players are coming in, that's kind of gone out of the window. It's not irrelevant. There's still a lot of information you can glean from the on-chain analysis. But it's all, it's all a learning curve, and you can only absorb the knowledge at the pace that's right for you. So, if I haven't got the headspace to work out what I'm going to do, and if I start feeling if I start picking up on any vibes of what's going on in the community, absolutely, the fear, the greed index, the FOMO, any of that, I was like, no, it's time to just step back and just let it do what it's going to do. And yeah, it went down. And if I'd been more switched on, perhaps I would have sold stuff. But then, you're then also creating a tax event, and that tax event then means that you've got paperwork to do. So you kind of think, just let it do what it's going to do.
So you make a good point about the difficulty of it all first, about learning about it, because there can be so much in that. I'm going to throw this out to everybody, really. Any opinions or thoughts? If you speak to somebody who's completely new to this space, and they read about Bitcoin in the Sunday Times that weekend or something, and say, oh, what's all this about? Where would any of you point these people to now who are just beginning to learn? Any recommendations?
I don't know. I just said there's just a lot of newsletters out there that you could just start reading and following through that basically Cointelegraph and the block and all. I just basically subscribe to everything. Now I've got all kinds of junk coming in. Now to start to tidy everything up. So, that was interesting. And the other thing that I found quite amazing actually was in DeFi is something called Finematics, which is a pretty cool website. And the way it explains things are pretty, it's very clear and simple.
Okay, so I'm always keen to promote anything where people say, this is a good site, this is worth looking at. So that's Finematics, is that right?
Yes.
Okay, so that's one for people who are watching afterwards to maybe check into that. Because I'm similar. That I subscribe to lots of newsletters. I look at various things now. It is very easy to become completely overwhelmed with data overload in this space. Definitely, you can get emails getting pinged to you every 5 minutes about events and that. So Key, you mentioned Cointelegraph, which I consider an entertaining and informative site that is quite good. If only for the cartoons that they have in that, which are really nice.
It's very unique that way,
yeah,
I think.
Whoever their artist is, I love the style on that. But they are sometimes first out with some of the news as well, but you have to then dig into it. Any other recommendations for people who are just starting out?
I think it really does depend on their interest and where they want to come in. I mean, if it's going to be a long-term investment, then I think that there are going to be some newsletters that are far more appropriate than others. I mean, if you're going to get into trading and understanding the markets generally in terms of what's going on, I actually find the Coin Bureau really good because he's very good at explaining the basics, and he speaks straightforward language, and I think that we need that because there's just so much science that can absolutely blind you. But I was
just going to say that my only gripe with Coin Bureau is I do wish he'd turn off his boring filter, because he's got his boring setting to max. And it's just like, you're actually talking about something really interesting here, show some enthusiasm.
Yeah.
But I think it's ultimately because I'm not actually convinced he knows much about what he's talking about. I think he's actually a presenter who's reading it off an auto cue.
I like the Coin Bureau. I've watched a lot of his videos. I think YouTube in general is a good place to go and learn about crypto, because there's a lot of content out there, and people come to me sometimes and they say, "Well, know about crypto," and I say, "Well, give yourself 40 hours of YouTube viewing of videos about crypto, and you go from one video to the next, and whatever kind of point of the the information takes your interest, then you go and research that on a further video." But Coin Bureau do fairly regular updates. They cover a lot of different coins. I do think he knows what he's talking about. I do think he may be reading from an auto cue just in order to make the whole thing flow. But he puts it in common sense terms, and I think he's got a genuine passion for crypto. I'm pretty sure he came from a traditional financial background.
Yeah,
he certainly looks like a city boy, doesn't he? Really, but he's knowledgeable enough for me.
I did check into a bit of his background a while ago, and I'm fairly sure there was an acting element in there or something. So I think he wants to be a presenter as much as anything else. Due credit, he's standing up there in front of the camera. He's talking about an awful load of stuff, so I won't be critical about that.
He's consistent, though. I mean, that's the thing that, and because if you're talking about somebody who's coming in as a complete newbie, then it does actually need to be quite boring. It needs to be very simple, very basic, because, essentially cryptocurrencies is rewriting the financial industry. And if you don't understand the financial industry in the first place, you've got a bit of catching up to do.
Yep.
I mean, there are others that I kind of have a bit of a love-hate relationship with, things like Crypto Banter, which, has a very modern, upbeat vibe about it. So that will definitely appeal to the younger generation who are wanting to speak the lingo of, I don't know, the modern culture. But I think one of the key things that people have got to do is to identify what is a scam. They've got to, first and foremost, they've got to look to see, what actually constitutes a rip-off, a scam, and potentially something that speaks the right language, they say the right thing, they use the right words, they present it in the right way, but it's not good. It really is not good. And it's very, very easy to get suckered into the sales spiel, and, you know, and actually being able to have that, you know, a bullet point list of the key ingredients of what is something worth looking at versus what is an early warning signal, I think is absolutely critical.
Yep. So let's stick with the signals now. Mark, I was going to ask if you've got any views, because you've been in the space for a while. Any recommendations on sites, blogs, video logs, whatever? Anything which is your favorite?
Yeah, so I'll name a few. I think CoinDesk is very good. They've got some great basic 101 guides in there, and then give you the opportunity to dig deeper into certain reports. So as a start point for people who want to just get the 2+2 guide, I would always head there first. It's also a great source of information, as you were talking about Cointelegraph and others earlier, and I tend to go to CoinDesk quite a lot because I know Michael very well from the early days, Michael Casey. If I'm looking for more detail, and this is less financial, but more reports about markets, information on players, and general landscape, I'll typically go to the European Blockchain Observatory and Forum. That's a funded entity that produces reports on behalf of the European Commission, looking at the entire European landscape. And they look at applications from the straightforward crypto, all the way through into DeFi, but then more into healthcare applications, energy trading, and things such as that. And then, of course, the organization I've been running for the last 2.5 years, if you have any interest in policy or the intersection of policy and the markets, then INATBA, INATBA.org, with the reports that we produce on there. And they vary from looking at topics around privacy, to healthcare, to finance, to standards, to interoperability and sustainability, and pretty much anything else in between. But it's very much what we've been producing is a summary of the work we've been looking at from a policy point of view. You know, what are the big policy topics that governments need to look at to try and allow this industry to go beyond the froth that you were talking about earlier, where, you know, I forget how many coins there are now. In the good old days when I first got involved in 2013-14, I think there were a couple of hundred coins, and even that blew my mind, just trying to keep up pace with them. I think this time around, if you did a count, there's probably 12,000 or so. And it's, you know, most of them have got no utility beyond trying to make the coders very rich for some reason, just because most people are spread betting. So trying to stay up with the information about all of those projects is an impossible task. And I saw CZ the other day in Paris of Binance, who gave some pretty mundane, but really basic and worthwhile information to follow. If you are looking to invest, firstly, you know, take the amount of money that you could afford to throw out of the car window on a long journey from somewhere and only use that. And secondarily, pick just a couple to maybe 5 projects max that you can afford to follow, that you understand, that you get the utility of, that you can sit on top of the news about, and that you can become a real expert in. Because by doing that, you'll be able to gather information and make better decisions. If you're not doing that, then frankly, it's just akin to buying a lottery ticket. You know, your chances of winning are, I don't know what the chances of winning the lottery in Europe are, but probably 1 in, I don't know, a few hundred million.
Sound advice, I think, all of that, definitely. And I certainly support, as you're saying about the European Observatory. They do a lot of really interesting research and publish some good stuff as well, definitely. But you're saying your organization, INATA.org, is that right?
So I'll give it to you again. It's called the International Association for Trusted Blockchain Applications. I'm not the marketeer, so don't shoot me for the name. And we shorten it to INATBA, INATBA.org.
Okay. And I'll stick a link into the recording of this as well with a link to the website. Thanks for that. Because the thing that I've found is that there are, compared to when I first moved into this space, which was like 2014 to 2016, when there wasn't that much information available. Nowadays, there's an awful lot of information, but it's a matter of trying to work out what's good information and what's opinion. And I've found that, what's that saying about empty vessels create the most noise? I've been to any number of events where I've discovered that the people who talk loudly and regularly are probably the ones who are least well equipped to actually talk about what they're talking about. I think, is it the Dunning-Kruger effect, which is where people actually know less about what they're talking about, and some people know so little they don't realize that they don't know what they're talking about. But that doesn't stop them. So sometimes I find that. So I think where we can use things like this session to bring out actual genuine good sources of information has got to be good for the community as a wider thing. So that's great. Oh, thanks for sharing that.
Just a final thought for you, Gary. One of the, and this is again not financial advice, but one of the ways I run my own due diligence whenever I come across a project is to look at the number of code commits and look at the number of developers. So if you go to GitHub, if you're familiar with that, or the other repositories where code is being built around projects, and you see tumbleweed running around, or 10 or 20 developers only, and under 20% of those developers actually making code commits on a frequent basis, i.e. writing code which is then accepted into the project by all of those that are leading the project, that to me is always a warning signal. And I would never choose to go near one of those projects. Whereas if you've got a good number of developers assembling around the code, making regular commits, pulling the code to pieces, criticizing each other, rewriting it, putting forward suggestions and proposals for the review committee to look at, i.e. you've got a healthy ecosystem, that suggests to me that at least the first sniff test of there being some value that's trying to be created is probably being held true rather than just a bunch of froth. Otherwise I'm always reminded of OneCoin, if you're familiar with that. Yep.
I love OneCoin for the very fact it's promoted as the biggest crypto scam ever, which wasn't actually a crypto scam. It was certainly a scam, but there was no crypto. Ultimately, but yeah, it's a good point about GitHub. The only caveat I would offer on that is that obviously that is only on open source based projects, and you get some developments certainly in the blockchain space where they're using private ledgers and it's closed. So the likes of Corda as a protocol, for example, from R3, there's a lot of stuff that goes on in that which isn't published, but because a lot of the community is in the banking sector where they don't actually want people to know what's going on. So I agree completely for open source, particularly a lot of the cryptocurrencies on the blockchain side of things, taking a look at the likes of GitHub commits and seeing how much actual development work is going on is a really good indicator. So thanks for sharing that one, definitely good. I just wanted to change direction slightly a little bit in terms of the conversation. So we've talked about some really useful information sources about where people can find things at the beginning. I just wondered if anyone's got any thoughts on where the market is at the moment. So I'm thinking in particular for those who are watching it, Bitcoin. Bitcoin did reach, was it $65,000 a little while ago? It then tanked. It's now hovering around about 29,000 mark. I'm hearing a lot of people who are active traders talking about if that drops below 25, it'll go down to 11,000. And I just wondered if anyone's got any thoughts or if they've done any research or analysis themselves on that.
Yeah, if you look at the long-term chart of Bitcoin, each Bitcoin winter, each drawdown, it comes down by about 85%. So it's kind of like a fractal of its own history. Yeah, so that does take it down to about 10. I mean, it doesn't necessarily have to go there this time, but to me, the way it tends to be trading, the fact that it did have such a run up through 2020, 2021, I think it just, it needs to come off the boil a bit just in order for things to become rational.
Yep.
And then I think, yeah, from a fundamental point of view, looking at the way the DeFi protocols are stacked up, as I say, it just doesn't look healthy. There's a lot that needs to come out there before we can get back to reality and start to build something solid.
It's interesting as well, as I was having this conversation with another group a few days ago. And the one thing that I comment on, which I thought, well, I thought was interesting, is that if we take a look at, let's use Bitcoin as the example, because that's like the one that the rest tend to follow type thing, is that a lot of people are saying, the 2021 cycle, as you say, it's kind of like almost a repeat of two previous things. But I think that if we go anywhere beyond 2019, I think it's a completely different market. I think that it's totally different investor base, totally different holders. And I think the behavior of the market is now changing. So I agree up to the point of, from around 2020 onwards, certainly, what we're seeing certain patterns going on. But I think anything before that, the numbers were just so significantly different. Because before 2017, it was like $1,000 or below, wasn't it? And I think that's just a totally different market, but that's my view. I don't know what others think on that.
The only thing that would be different is if it follows the path I'm talking about. If we do go down to 10,000, we're actually going down below the previous high of 20,000.
Mm-hmm.
In each of the previous drawdowns, it hasn't gone below the previous high. So that would be a different scenario this time, which basically means it just hasn't gone up by as much in the up run. So maybe that means it doesn't come down by as much, Yep. Things do change over time. It doesn't necessarily have to be 85% down every time, but
yep.
As a kind of a marker as to what's happened before, that would be the most likely outcome.
I think the other thing as well, and I think he was alluding to this before, I think that we're going to be seeing some regulation coming into play pretty soon. And I think what is going to happen with regulation is that then makes this as a regulated financial instrument, which then means that the big players, the hedge funds, this kind of thing, can start moving into this space properly. And I think that means serious money is going to come into this space, and it's really, really going to ramp up. Again, this isn't financial advice, but I do wonder if we are going to see some quite sizable shifts in the market once the big players come into it.
I think the point is probably the regulation is probably not going to come fast enough. And, this thing is probably, even with MiCA, it's probably the closest thing on the horizon. It's probably going to take 1.5 to 2 years to get that approved, right? It's more about, I guess, listening to the rumblings more than anything else and anticipation, because the market tends to get driven by just news more than anything else. But I don't see anything tangible necessarily. And even the FCA is basically talking about just looking at more stable coins and CBDC like currencies than actually looking at the rest of the market. So I don't know. I think that institutional money is probably not going to be coming in the short term to rescue the market at all at this point.
That's going to be kind of interesting, because there is the potential that the big players may try to angle their way into central bank digital currencies, which are not the same as cryptocurrencies. So I keep trying to explain to people that a CBDC is a digital currency that is controlled by a nation in some way. So it's centrally controlled, probably by that country's central bank in some way. So it's digital in nature. That's fine, but it's not a cryptocurrency.
Yeah, I probably meant stable coins more than anything else.
No, but I was going to go into that, because I think there's an overlap between the two in some ways. I think that the technology is slightly different, but I can see the potential for stable coins, or almost for there to be like state-supported stable coins in some way, which is an interesting blurring. I agree with you that I think stable coins may be the next big thing. I know in the various meetings in Parliament have been doing that. There's a lot of conversation around stable coins now. And I do wonder, are we going to see this kind of crossover between CBDCs, which are digital currency, which is the way the world's going anyway, and some sort of state-sponsored, state-approved, state-regulated stable coins, which would then let the big players come in. So
this is an interesting one, I think, because people say to me, do you think we're going to get central bank digital currencies? And my answer is, we already have them. If you look at your bank account online, that is a digital currency, and it's controlled by the central bank. The only difference is that they can create as many of those as they like, whereas cryptocurrency is limited by the code as to how many can actually be created. So, you know, in the long run, you know, where does the Bitcoin price go to? Most likely infinity, because we know that the fiat currencies will fail eventually. But, you know, fundamentally, as we've moved from gold to paper cash to digital currencies, you know, we are now in a world of central bank digital currency. So it's almost like, I don't know, it's almost like a kind of 1984 doublespeak, because they're creating this suggestion that there maybe one day be central bank digital currencies, but they're already here. I don't know what they're talking about.
Well, I think there's a few things on that. The first is that the way that central bank digital currencies are now being talked about, it's the notion that they're going to lift some features from cryptocurrencies. And the two main features being, first of all, it being maintained on a ledger in some way, where at the moment, there's no easy way to openly see where money is being created or where it's going. And, you know, the Bank of England can create money, and it's got its ledger, and it can make that available as lending to the banks and so on. But there's no kind of like traceability of any of that. So I think that's one thing that is going to change with
they are able to trace it, and the tax authorities are able to trace it.
Yeah, but no one else is. And the other thing is the notion of programmability, which depending upon which side of the fence you're on, if you're Orwellian in your thinking, that could be quite scary, because it means you could switch off or switch on access to money. But going back to your point before,
they can do that already. They can shut. I mean, Justin Trudeau did that. You know, they can do that. I mean, the only time they can't do that is with a non-custodial wallet. That's why, you know, if you really do believe in crypto, then you really shouldn't have your money on an exchange at all, or any kind of custodial kind of facility, because in the Justin Trudeau scenario, they did shut down people's crypto assets. Anything that was on an exchange was by force closed down. So the real, you know, true spirit of Bitcoin and any cryptocurrency is to be on a non-custodial wallet, and that way you can still transact with other people that have non-custodial wallets. They can't touch you.
And I think that's the point I keep trying to make with people about the difference between a digital currency and cryptocurrency, is that a cryptocurrency at least is decentralized and you own access to it, which makes it censorship resistant. I think ultimately they could still do things to limit access to it. But as you say, Canada, you know, that they switched off the banking for the truckers who are protesting. They can do that with their existing technology. The other thing on central bank digital currencies as well, just quickly on that point, is I think there's probably going to be two types. There's going to be what we would call retail digital currency, which is what you and I know as at the moment, and we've currently got money for that. There's also wholesale digital currency, which is interbank settlements. And I do suspect that's where they'll go first. So they'll use it as like a new settlement layer or something to replace RTGS or something like that. So real-time gross settlements is what we've been talking about.
The real benefit of distributed ledger technology is that you have a single ledger. There is no settlement process required. You know, that's it actually threatens the jobs of a lot of bankers, really, because a lot of what they do is actually reconciling the ledgers between the banks. But fundamentally, if you have a ledger which is effectively the currency at the same time, you know, the process of making a transaction is a settlement. There's no disputing it. You know, every transaction is, you know, unfloorable. So it's it's a simplification of the banking system if they do it. But if they do it in exactly the same way as the Bitcoin is structured at the moment, and they force people to have identity against their wallet, then that would mean everyone's transactions are open for everyone to see, and that would really be quite a breach of privacy in a lot of ways.
Which you can see that is kind of a directional aspiration, I might describe it as.
I think it is, yeah.
Yeah, because you can certainly see the way that the government's telling the banks about things like KYC, anti-money laundering, the MLD6, so the latest money laundering directive, source of funds. There's all these kind of things which are demanding evidence of identity. And then you look at, is it in India, where they've just mandated that VPN providers now need to record all details of who their customers are and which VPNs they've used and all this kind of thing. You know, VPNs, the whole idea of it is that it gives you a level of obfuscation and privacy. If you've suddenly got details of which VPN someone's using and details about them, you've lost that. So I agree with you. I think there's a desire to be able to track people against their wallets and this kind of thing, which, you know, ultimately may be why the FCA's now got its crypto asset register, where any UK company, if they're trading in or dealing in crypto assets in some way, they have to go on the FCA register, because the FCA is now responsible for supervision of anti-money laundering activities.
Yeah, I suppose in that sense, if you are a crypto project of some kind, the objective is to not be a company.
That's where it's going to be interesting to see where DAOs go. So decentralized autonomous organizations, where they keep rearing their head and coming up and then disappearing in that. If you've got an entity which is not an incorporated entity, so it's not a company that's registered somewhere, it has no jurisdiction, no domicile, then it comes back to the, can you regulate that type of organization?
Yeah, I mean, that's what my project is. Effectively, it's not a company. I have developers that I'm paying out my own bank account, and we are writing code which we will put out on the internet. Effectively, we will enable people to use it, but there's no legal entity. I mean, ultimately, if they really want to put it down in some way, they'll probably just come after me as the person that's paid for it. But you know, it's in terms of regulation, I don't know. I mean, where can they, without there being a company in place, where does the responsibility lie? I think that's a difficult one for the rules to fathom, and that's where they're going to struggle with regulation, because inevitably, as they do start to try to find ways to regulate DAOs, people will find another form of organization that goes beyond that regulation. And I think inevitably the people building crypto applications will be smarter than the regulators.
It's, again, you can see the way the regulators are dealing with it for now, in that they realize they can't regulate the cryptocurrency directly, but they can regulate the on-ramps and off-ramps to it. So we can see that certainly happen. But that's where, once you end up in a total digital environment, you know, and you've got DAOs and this kind of thing, where you're no longer going back to the fiat world, that's what makes it more interesting. I'm really fascinated. I'm hearing some people now who are setting themselves up as legal advisors within the metaverse. And I just love the idea of how a regulator is going to regulate the metaverse. And, you know, if they think they're struggling to regulate crypto, where at least there are on-ramps and off-ramps to the real world, once it's all totally virtual, their head must be spinning around that right now.
I think it is encouraging that, you know, they can only really regulate the on-ramps and off-ramps. And fundamentally, anything that is a scam within crypto, you know, it generally is they're trying to take money out in fiat. So they ultimately will attack, you know, people that are taking money out into fiat. For true crypto projects where the coins are issued from within the community and they have a value within the community, and that there is no transaction out into fiat, I think that they will be much more untouchable by the regulator.
I suppose the other thing is that from a regulatory perspective as well, because I remember a few years ago, the FCA asking, well, how many people in the UK have got cryptocurrency and how much in value have they got? And it's like, well, I can tell you how many wallets there are, and I can tell you how much crypto or the keys are in the wallets, so reflecting the value. I can't tell you where the wallet is physically or anything, or, you know, who owns it. And once you go into this metaverse world, again, you get this problem of, well, is that UK consumers who have been affected and you need regulation for? It's an interesting space.
Yeah, I mean, they have regulated the on and off ramps effectively, haven't they? I mean, Coinbase and Kraken, they're all FCA regulated. I suppose in order to actually make a financial benefit from something in the metaverse and take it out to fiat, they've got to go through one of those ramps. So that's where the regulation comes in. yeah, I mean, it's interesting to see projects that will actually derive a value without transacting into fiat. I think that's going to be the real opportunity with crypto.
Yeah. So Simon, you mentioned you've got a project. Is that something that you can share any more details of at the moment?
We have developed part of the application. The first thing we did was we created a new kind of wallet. We looked at what was going on in the crypto world and decided that the biggest problem that people have, the biggest barrier to mainstream adoption, is probably people losing their private keys.
Mm-hmm.
You know, that's the story that gets out in the media the most. It scares people into not getting to crypto. And when people do get into crypto and they write down their 12 words on a piece of paper and put it in a sock drawer, and then several years later, when Bitcoin's gone up 20 times over, they try and find it and it's disappeared. I think that the pain that those people experience in that scenario is quite extreme, and it probably puts them off crypto forever. But I think the user experience of having a wallet give you 12 random words and expect you to find somewhere safe to put them is not a great one. Most people don't have a safety deposit box, and most people aren't going to remember 12 random words.
Yep.
So we've developed a wallet that prompts the user to upload a photo. So every photo that somebody takes with their phone is a unique digital file. And then they can add a password to that, and the two are hashed together into a private key.
Mm-hmm.
So then anywhere they go in the world, they can pull that photo out of their phone or off another device, or if they've emailed it to their friends, they can ask them to email it back. And they can always access their keys as long as they've remembered the password. But yeah, I mean, the reality is remembering a password of your choice is far easier than remembering 12 words that a wallet has randomly given to you. So
Yep.
that's the first thing we've created, and it sort of overlaps with what we're doing. It is a media broadcasting platform. So we allow creators to upload digital files, whether they be pictures or videos or songs or podcasts, and we enable them to set up a revenue share from that media. So if they've had 4 people working on creating a film, then they can input the 4 wallet addresses of the people that participated and create a percentage split for each of those 4 people. And then anyone that sends any money into the public key of that digital file, it's basically we take the digital file and we hash it into a private key, which creates a copyright. It's a record of it on the blockchain that will always be only identifiable by the actual file. The public key associated with that, we set it up as a QR code. So when they go onto that wallet, that sort of URL that we associate with that bit of media, I mean, it's effectively an NFT if you want to. It is tokenized media, but not in the sense that we're going to buy and sell these things on an exchange like OpenSea. We're basically just enabling a creator to platform their media and have a payment system that sits around it, with the royalties management splitting out to the people that are party to the creation of that media. So in a sort of historic example, if you were creating a film and you wanted to ensure that everyone was rewarded that worked on that, you would have to create a company, have legal contracts, accounts, invoicing, chasing people for money, bank accounts, all of those things. But using this technology, you basically just upload your file and set up your wallet addresses and your percentages, and everything else is automatic through a smart contract.
So is that something that at the stage you're at the moment, do you have anything public that we can go to a website?
If you go to excal.tv,
go on, spell it out for those who are listening afterwards.
excal.tv. You'll see there the wallet. DRM is digital rights management, and then the player is an example. So the stage we've got the digital rights management set up, the wallet's all created. We've not quite linked the DRM through to the player yet, but that's what we're working on at the moment, just so that the files that people upload will pop up on a web address, and you have the payment opportunity there. Great.
So there's another recommendation for people to check out separately and see how things are going on that. Thanks for sharing that, Simon, because this is the thing I love about this space. Every week I learn about some new and interesting project, and it's like, oh, wow, that's incredible. That's amazing. So it's
definitely one to keep an eye on. I mean, the objective is once we've got the thing functioning properly, we will enable people to copy the URL of the media they've viewed. If they like it, then they can send that URL to their friends through email or WhatsApp or whatever.
Mhm.
And if their friends then pay for it as well, then they get rewarded with Excalibur coins.
Okay, because it was interesting just picking up on the kind of approach you're describing there about the royalties and that. And it's a somewhat different topic now. It's something that was in the news a few days ago. There was a hack that took place where some NFTs were stolen. And it was interesting that I think it was on the OpenSea platform, and it involved, I've forgotten who the development agency was, but they were really proud to announce that they'd hacked the hacker by changing the royalty amount. So effectively the royalty back to the originator was racked up to 98% instead of 5% or whatever.
Yeah.
And then I think they bought the NFTs off the hacker, which meant that the hacker only got 2% of the actual value or whatever. And, you know, they were really, really pleased to announce, oh, we managed to hack the hacker, blah, 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 blah. I think they actually also did a great deal of harm, because it showed how it is that something that everyone thought was decentralized and couldn't be modified and changed.
Yeah.
If you can suddenly subsequently, if a team of people can manipulate the royalty amounts post minting, that doesn't augur well.
This is the thing we have to think about as we build it, is we need to really get this economics right, because once they're done, they're set in stone. We can't change them. You know, we have no plans to do any kind of fork like Ethereum did to Ethereum Classic. You know, I mean, Ethereum Classic is the real Ethereum in my opinion.
Yep.
Yeah, you know, that's the essence of blockchain, is you set up a pile of code, and people use that code, and it's ultimately a process of evolution. You know, if the code doesn't achieve the aims that people wanted it to, then it dies, and people move on to a new pile of code and see if that one works. You know, in reality, I guess lots of protocols will be superseded by alternatives, but you need to sort of steadfast stick to what you set out to do at the beginning, because ultimately the code is a contract.
And I think that's the thing that frustrates me at times, that when you get things where people say things like, well, what's the benefit of a blockchain? You say, well, it's immutable. Well, what does immutable mean? Well, it means you can't change it. Okay, talk to me about that a bit more, and that you explain how it is it can't be changed unless you've got consensus in there. And then you get things like the Ethereum fork, which was in response to the DAO hack, which is why we ended up with Ethereum Classic, which was an example of, you know, actually you did just change history. You've changed your blockchain, you've done a hard fork, you've created a new one. You're either going to stick with your principles or you're not. And I think this is, again, it's a little bit like a series of plane crashes where these things either prove or disprove things. And I think the DAO hack of 2017, which led to the fork of Ethereum Classic, actually demonstrated unequivocally that not all blockchains are truly immutable, because you can just create a new one. And they're not as decentralized as you think they might be, because I don't think it was the majority of the community who've actually voted in favor of that fork, which is why
I think it was the majority of the Ethereum holders voted in favor. And I mean, you know, in reality, you know, Ethereum Classic is still there because people that didn't agree with that fork, you know, are still holding that ledger and agreeing with the other people that agree with that ledger. So in some sense, all of these things are literally just a consensus of a group of people that agree to interact with each other based on a set of rules that are written in computer code. That's why, you know, every crypto coin is fundamentally a community. But that's what makes it decentralized, is that you know, the people are interacting with each other. There is no single person in charge. You know, they are decentralized by their nature, which is a very positive thing about crypto. And when you look at the way Web 2 has gone, and the way, you know, advertising payment mechanism has led us to a very centralized Facebook, Google, Amazon, you know, there needs to be a fight back against that. There needs to be an alternative. And, you know, the further we go down that path of tracking and you know, sort of in media advertising, the more nasty it's going to get, in my opinion. So I think, you know, what we're building now is absolutely necessary in order to ensure that we retain democratic freedom.
It's a very powerful thought, and that's again the thing I love about crypto, that you start off, when you get into it initially, you learn about how cryptocurrency works. Then it actually forces you to look into it a bit deeper, and then you're suddenly looking at how fiat currency works. Then you start looking at democracy, and I was fascinated the other day, very similar conversation with someone, and we ended up having a conversation about philosophy. I said, you would not believe how many times this happens when you start talking about crypto and you go down the rabbit warren, and you end up quite philosophical. So yeah, that's a good call, Simon.
That's literally what happened to me. I spent 8 years trading cryptocurrencies, working on the basis it was all a speculative bubble. Last year, I really spent a lot of time researching the individual coins, because I just thought there's something more to this. Yeah. And I want to really kind of delve into it and understand better where the new growth opportunities might be. But yeah, ultimately, I just realized that the technology had a real fundamental value and we could build something good on it.
I think that's ultimately the thing that people need to keep remembering. So stop looking at prices all the time and start looking at where this is going to take us as a society and a community, and that. So that's
the best thing about Cryptowinter.
Yeah. it kind of shakes the tree a little bit, doesn't it? And brings things out. That's great. Okay, folks, we've only got a couple of minutes left. We're coming towards 8 o'clock, and I'd like to close this off on time. I was going to ask if anyone's got any final questions or comments or anything they'd like to share before we close off for today. Georgina, what are you thinking?
Yeah, I think that it's been really interesting. It's like watching Luna and what happened with Luna and UST. I absolutely agree with Simon that, you know, there are certain things you've got to fight back on. And I think that what people also need to remember is that, you know, Bitcoin in 11, 12 years is essentially reinventing a financial system that has evolved over thousands of years. And, you know, each time we hit upon a roadblock, you know, the community as a whole, they say, sod that, you know, and they fight back. And, you know, you get collectives of developers and innovators and creative people who are saying, okay, how can we solve this problem? How can we stop the markets from being manipulated by the big guns? How can we prevent, you know, having our privacy invaded and intruded upon? How can we solve this particular world problem? How can we support humanitarian projects in a fair and just way? You know, how can we actually make the world a better place? And it's the community is moving incredibly fast. And, you know, considering, you know, the length of time that it's been in existence, the kind of thing, problems that it's tackled already is huge, and it's continuing to grow and develop. And the more people who get involved, even just by being interested in cryptocurrencies and putting their 10 quid in to this coin or that coin or whatever, it's growing something that is ultimately changing the world. And, you know, we have to bear that in mind. It's what was true yesterday is not going to be true tomorrow. It is evolving at a phenomenal rate.
Yep. Completely agree that the world keeps changing. And that's why I love it when you even look at the traditionals like JP Morgan, who originally was saying, oh, crypto, it's, you know, spawn of the devil or whatever. And now they're recommending Bitcoin as their reserve asset over real estate. So they've certainly moved on, which is quite an achievement. Folks, we're going to have to close it there, I'm afraid. Thank you very much, everyone who's joined us today. I hope those who are watching it afterwards have enjoyed this as well, as much as I have. Lots of things to learn about, lots of interesting insights. Do come and join us again. For the ones who are on YouTube, subscribe, like, comment, blah, 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 blah. Thank you, everyone, for coming along today.
Thank you for organising.
Thank you very much.
Thank you.
That's great.
See you again. Bye for now.
Bye.
Bye.
So do keep watching, do listen, do join in, do subscribe, do like, do make comments, and come along to a future session. Hope you enjoy it.